What up? What up? I'm back. It's time to read and react. It's time for Grow with Kezio. Let's go. So y'all see the headline tonight. Stock market today. All right. Stocks notch fresh records as the Fed affirms guidance for rate cuts. Now, hey, what does that mean? Right? If you're trying to follow the markets and follow macroeconomics, maybe for the first time, that's who I want to talk to. All right. It's good to know what's going on in the economy, and from a large standpoint, from a bird's eye view. That way you know which decisions to make and which decisions not to make, which things to purchase, maybe which things not to purchase, when to go on vacation, stuff like that. That way you know what to do moving forward. Sorry, my phone's going off. So just to hit the bullet points. Stocks surged on Wednesday as the Fed affirmed its outlook for 3 rate cuts later this year. And those 3 rate cuts are basically the Federal Reserve making it cheaper to borrow money for the banks. Therefore, they make it cheaper for the average worker, the average citizen, to borrow money from the bank and maybe go on a trip or open a business or buy a car or purchase a home. So people are rooting for that. They want the cost of borrowing money to come down. And the Fed basically hinted that they're going to make it cheaper later this year. So the stock market surged, right? Because people want to get ahead of that and start buying the stocks now before the prices go up of everything. Second bullet point, major indexes rose with the S&P 500 surpassing 5,200 for the first time ever. Okay, so the 500 biggest, most successful companies in America are part of the S&P 500, and they're all given a score. They're all given a certain percentage weight in the index of the S&P 500, and the biggest companies are worth like 25 points, or not 25 points, sorry, worth 25 points maybe combined. Like let's say the biggest 7 companies, Tesla, Apple, Google, Meta, as in Facebook, Amazon, they're worth like 7-8 points each. And then the other companies in the 500, in the list of 500 stocks, they're worth like maybe 1 point or half a point. So combined, the index is worth, its worth became more than 5,200 points combined for the first time ever. So we're at all-time highs for basically the most important companies in the stock market in America, which is huge. And it's good if you have been in the stock market for the past few years. If you're just now getting in, that's bad. You don't want to buy when the stocks are at all-time highs, right? You want to wait for something to go wrong and for the prices to come down, because then now you can get in at a cheaper price. It's like a discount, like everything's going on sale. Black Friday ended up, well, you don't want to say Black Friday when it comes to stocks, but you want discounts to the things that you're buying. The third bullet point, investors are ramping up bets that the Fed could issue its first rate cut by June. So if you're thinking that prices are going to get cheaper, debt is going to get cheaper by June, and you're thinking that, hey, you might be able to spend more money by June, then as an investor, you're thinking these businesses that I'm investing in, their sales are gonna go up when the Federal Reserve makes it cheaper to borrow money, because America runs on debt. America runs on borrowed money. It doesn't run on actual cash. So people will buy things that they can't afford by just borrowing the money and paying it off later. So right now, stocks is going up, right? U.S. stocks surged on Wednesday with the S&P 500 notching a fresh record as investors took in the Federal Reserve's latest policy guidance on rate cuts to come this year. The S&P 500 closed above 5,200 for the first time ever, and the Dow Jones Industrial Average soared almost 400 points to notch a new all-time high. The NASDAQ Composite ended more than 1% higher. Okay, the Dow Jones Industrial Average used to be the most important um, index or group of stocks in the stock market. Now it isn't anymore, but it's basically, I think, 30 stocks, um, 30 companies, 30 of the biggest companies, and they're all put in there based on their price, or they're listed based on the price, not based on how much their revenue is or how much they're worth. And then the NASDAQ composite, that's the top 100 stocks that are based on technology. So Fed officials kept interest rates steady at 5.25 to 5.50, as markets had been broadly anticipating. So they didn't make it cheaper to borrow money, and they didn't make it more expensive. They just kept it as is. Officials also reiterated guidance via the dot plot that 325 basis point rate cuts could come, not will, but could come later in 2024, assuming inflation continues a downward path. But if inflation starts to go up again, then they won't even get those 3 cuts. It'll be less, but we'll see, because there's another meeting in June and July. For May, June, and July, there will be, those are the next 3 meetings. There's no meeting in October. Let's see. So 25 basis points is basically 0.25. Hello. So yeah, that's it. That's about it. We are strongly committed to returning inflation to our 2% objective. Okay. Fed Chair Jerome Powell said in prepared remarks Wednesday afternoon, as quote unquote, as labor market tightness has eased and progress on inflation has continued, the risk to achieving our employment and inflation goals are coming into better balance, he later added. So basically, seems like they're almost seeing what they want to see in order to lower rates and make it cheaper to borrow money. So that's about it. But yeah, go and check it out. That's it for today. Until the next episode, until the next time, I am Kezio, and follow me weekly. Grow with Kezio. Like, subscribe, and comment below. Peace.